Okay, guys. Let's check. Let's start AUDNZD. Yeah, AUDNZD. Let's check an opportunity where price will be. So by starting with higher time frame, yeah, let's start with higher time frame. Let's zoom out. Here is our load map where we end. Where we're supposed to. So this one, let's stick on major on, on major trend, right? On this downtrend. This major trend, downtrend, right? This is very important since you should look major trend, minor trend, and market structure. Then demand is supply. So this is major trend, major downtrend. So within a major trend, downtrend, there is minor trend here. This is minor trend, minor uptrend, minor downtrend, minor uptrend. That's how the retracement is. And this one, so let's change color. This one, so this one. Let's change color here. Let's use ready. Let's ready. Minor uptrend. Minor uptrend. So this is downtrend, major trend, downtrend. This is uptrend. So within this trend, there is minor, downtrend, and uptrend. So we call it a market structure. We have here high. By starting here, high, low, high, low, high, 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 low, high, 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 low, high, 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 low, high, high. This one, price doing structure breaker. So after doing structure breaker, when we zoom out on lower time frame, we shall see it. Okay, let's change here. Let's do lower time frame. We shall see something. Structure breaker. So this one is what I call it a structure breaker. Using this after this, I have market or price fail to create new higher, high. Then price when drop they break this because I had high low, high low, high. Price fail to create new high low, then they creating lower low. They create lower low. That's all. Price fail to break new high or fail to create new high, then price fall. So that's what we call it a downtrend or major trend on downtrend. So we focus on market structure. It's very important. It's our key. The market structure is very important in forex market. So this is uptrend. So we know we have this zone, we have this supply zone, we have made more supply zone, but we should know most important one, right? The most important. So this is, so let's check this one. Yeah, this one is supply. This is supply zone. This is supply. It's very bullish. Now to lower time frame. Yeah, today I want to teach you you how to draw a supply zone, but a supply zone, you must look at the basic candle. Basic candle here, I can check or I can take on daily time frame here is my basic candle. That's all. Price must be for this. That's a price for that. Price drop by compression. This is a weak move. So after weak move, there is strong move. So don't expect the price to drop here. We have new here. We have here the supply, a major one. This is a fake out. We can call it because this one price start to rise at this, this supply zone. For this demand zone here, this demand zone on the time frame here. This very important demand zone, and this is significant demand based on basic candle. So how we draw a supply and demand, we consider a basic candle. So this price, we expect the price to rise up. Price rise up because this area is a fake out zone. So a fake out zone or fake breakout. So this area created by big institution so as to they get this area to cheat buyer and seller. This is how we fight. So we our intention to trade along with them. So don't trade against with them. So they create a fake supply or a fake out. So they create a fake out so as to cheap buyer and seller. So this area, when prices come to these areas, you will put your stop your buy your sell limit here and your stop loss here, but price will pop up to this area. When we go to lower time frame on 4 hours, we shall see a mostly or a clean supply where we suppose to put our entries up. So this area, so we expect price to rise here. This is price will rise because price still on. This one is a minor trend, right? This one is a minor trend. So let me make it clear. A minor trend. This one, let me change color. This one is a minor trend. So how do I call the minor trend, which I know? The minor trend is a retracement. There is a lot of here. This one is a minor trend. This one is a minor trend. A major trend is buying. So this minor trend is short retracement. So we trade retracement, but don't rely on retracement. So we lose money mostly because we focus on minor trends, not major trends. Focus on major trend, then you will spot a minor trend. So we expect the price will rise to this area because at this area this apart from this, okay, let's go to 4 hours time frame. Let's go to 4 hours time frame. Very straight line because when compared to this. So so do you see this here? We have a beautiful here. I see it. So price rejected this area. There is more rejection before price breaking this zone, weakening this price. They reject this area. So we call it significant demand reduction, right? Price rejected. We have the you see. So my entry, I take entry this area. Do you see this one? This here. This basic candle, I take entry. This my supply will be this area because at this area price shut down. So this is my supply. So also entry, you can take entry this. So if you want to minimize risk, low risk, you take entry here. But sometimes the market, you may miss entry because this area I expect price will hit up to this area, then will drop because I have a strong, I have this one. You can't take this supply because it came from, it came from SDE. SDE, significant demand engulfing. So significant demand engulfing, you can take entry from that. Okay, let me use data time frame. I use data time frame because on 4 hours our charts. Yeah, I can use this. So here I can, this I call a manipulation area. This, all this, so don't this, it will be fake. This price drop, but it's down. They can pull it. So that's all. So this area also the, so you see on 4 hours time frame we see a beautiful supply, but on daily, so you draw from 4 hours because in 4 hours we get a clear, we have a clear setup, like a setup, and that setup and that supply or supply, the basic candle that we get from the supply, it helps us to predict or to analyze where AUDNZD will hit and then AUDNZD will drop. So that's all. So here our supply zone will be that area, and then after that we have a main reason, strong reason that give us that's all. So let's check this area. Say this one is a and the price will drop. So this is our roadmap where we are supposed to go for AUDNZD. And this area, by on basing on market structure, so the price engulf this. This area is, this one has been engulfed. We structure breaker, we call it a structure breaker. So price on uptrend always price respecting higher low and disrespecting higher high. That's why the higher high keep breaking, but lower low is respected. So we expect the price will move up to this area, drop up to this area. So this is why we expect AUDNZD will AUDNZD. It's Sunday. Yeah. So I'm analyzing from daily, so don't do that because you are supposed to analyze the market from higher time frame to then go to moment. For higher time frame, you see a clear big picture of where you're supposed to go. So, yeah. this. So price, I know price will reach this area. This one. Price will reach this area. Yeah. So on basing on what I know, this one is a supply, also minor supply. Yeah. So we're expecting we have to supply this one. This. And this one, so price more compression. You see this compression in, and this is market structure. So price we're expecting here. Yeah, it's a supply, but we are looking. This supply will be a fake out. Because so price expecting this. So we're expecting price to grow. So here we analyze the market from higher time frame to lower time frame. So we see on higher time frame what's going on, AUDNZD. So when we come to lower time frame, we take an opportunity, lowest opportunity. Yeah, okay. Also, there it is. Right now, yeah. So this. Hours. So when we go to 4 hours, this one. So this is a compression. So we expect price to rise to break this zone because of structure breaker here. Yeah. What about it? I'm coming. I will come after a few minutes. Yeah, actually. This one. Here. Price. The price when price return to this area, they break this lower high together. They break this lower high, then they fail to create new lower low. So this one price is already break structure breaker. And trend, I know my friends, those who are using trend already complete trend goes where market structure ends with whatever. So this one, I'm expecting price to rise before this area, everything candle defines this area. So already structure breaker here, we have a structure breaker. So price to rise up, price to rise up, price to So we have supply here, but always use high time frame, because when you use the high time frame, it will give you a big picture. When you use lower time frame here, you can say we can take this supply. Okay, you can, but remember, market structure is very powerful. Together, market structure is very powerful. And this one is a smooth structure here. So smoother they know it. So this one is a smoother. This one is smoother. So we expect price to rise. The price will rise. Save it because it is well. Okay, let's go to another chart. Let's go to on basing NZDUSD. Let's check NZDUSD here. So as usual, NZDUSD will drop, but on basing with major trend and minor trend. Yeah, on basing with major trend. Our major trend is uptrend, right? Our minor trend is our minor trend. There is a lot of minor trend. So this is this one is a negative. This one is a negative uptrend. But within a major trend, there is a minor trend. You have to know it. Within a major trend, there is a minor trend. The minor trend is a retracement on a major trend. This one is minor trend. The major trend is buy. So you see a buy since last year, February. So up to today, this one is a downtrend. We have only two major trends, uptrend and downtrend. So don't complicate. Something easy. So even this one is a minor trend. This one is a minor trend. This retracement is a minor trend. That's why they price this area, they price that to this line here. So price will come. So even this, so we expect to use this supply. We expect to use this above supply. We expect to use this supply. And this one we have Marubozu here. I think everybody knows it. So, and Marubozu is same like Marubozu is same as something we call it pin bar or doji. When we go to high time frame, Marubozu is obviously because this is a basic candle or determining supply. So we have supply here. This one is supply also. Here we have this drop here. So when we go to high time frame, when I go, here is a drop this drop. I see drop this drop. Here is supply. This one very ralphing. So on basing market structure here is there is pin bar or structure breaker here. This one already enough. So an uptrend. If high or low on the structure engulf it, so you know what will happen. We know price will drop us a little bit, not fully. So this area is where we are supposed to go. But here, let's use already market structure. already structured data. So let's go to more time. So price might go in this area. So this area, yeah, this is a demand, a basic candle. I'm looking where price start to like that. And this price like so we have this one, we have this one. So we have almost so many demand. Sorry, there are so many demand. Um, so price, whenever prices go down, don't focus on welcome. Don't focus on downtrend because this is a minor trend, right? So we have the demand, so this area, this there is expected demand, price might fall, price might rise, but price here and this green all fresh. So these all are fresh. So price might drop of this here, the price might rise up to still continue bullish movement. So this and let's consider this one. So always we don't use a lot of demand. We just only use one. We will pick one because you have to be sure of what you're choosing. So this one will yeah, our probable demand. This one. Let's welcome. Okay, let's go. And we have a cost model here. Just the element of this model. Low, high, low, low, high. Yeah, this one. So let's go to high time frame. This. So this is a minor trend. So just the retracement. What we talk is just retracement because we have already see a structured data. So if there is a structured data, we'll see what happen. Market is still on up. So we're expecting to come this. So market will trace this here like that because that is also let's jump to this row those or most global yeah, this so I think you see the mode of rejection is here. So decision point will be this one or will be this one. This equality yeah, something interesting. Yeah, something interesting. Yes. this is something we say that. So this is a supply. So this rejection, also this will be out. So the decision point price will be this area and this area. So you choose this. If you are sure, okay, this, because this is also will be STP. I can put this rejection price here. Looks like so this area. So these are supplies. So you can see we have an opportunity. This one, this downtrend, this is a major trend. So when you focus on major trend, this one is a major uptrend. This one is a major trend. So that's what I told you. A minor trend. So major trend is bullish. A minor trend is, or retracement is bearish. So you have to put in mind. So it's very important concept. It's very important. It's very easy to use. It's easy. This is a major downtrend. This is major uptrend. So any retracement, any selling, it's not long. It's not last long because we are on uptrend. That's why I told you this area. I told you this area. Or supply, but if price will drop, this area will supply. Because price already down, it must retrace back, then price return. So we have this one demand zone, now this lull here, and we have this one bearish and bullish in there. So let's go to 4 hours. Supplies we expect. So it's very important to know a flippy. Flippy is a manipulation area. That's why if you know it, it's big for you. We have this. Also, this one is a flippy, and we have a mind for that. We use it to minimize the risk to take our low risk entry. This one is that's why price come to this area. They create a lot of noise, a lot of supply. So banking institution, the banking institution always they create this in order to make us. They know we trade, but this market is special for them. We are participants. That's why we are not supposed to go against them because they have a big tip. You and me, we might do my job, $100 and whatever, but even you have 1K, but want to move market because they have a lot of money because they buy low, they sell high. So this area, so we expect price will go to this area. Price will drop and dive to this area. So this is a flippy. This one is a flippy also. This one is a flippy also. So this area, if you take entry here, we know price will go up. Because this one, bank and institution, they create this so as to buy and sell low, to sell high. So they create it for us to, they create for in order to get our capital or our liquidity. We call a liquidity crunch. It's very a liquidity crunch area or fake out zone or flipping. It's highly, it's an area where there is a strong manipulation. One of the manipulations in everybody. You can lose your entire capital if you're not patient and greedy. If you're greedy and not patient, you're not. So about it, AUDNZD, NZDUSD, and then let's go to EURCHF. Okay, let's do CHF. Yeah, EURCHF. When I see this, I see, and you see this area previous was supply and price break it. So we know when price break a supply or demand, we call it something known as swap zone. Swap zone is where it's the area where price is respect demand or supply. So a swap zone. So this area is a swap zone. Let's check line chart. Yeah. We always prefer line chart because we know opening and closing price very clear. Because if you use a candlestick, you will have a lot of noise. I'm sure you will not spot a light entry. So if you will try it, if you want, use it. This one is there. This is swap zone. This area where you call it swap zone. You see this area price come, and when we go, you see this area. It's a strong supply. It's a strong supply, and previous were strong demand. You see, because my broker didn't give me more. So this price will be this area on swap zone because this area previous was demand, solid previous was supply, and now it's demand. So it's a strong idea. I can change the color because some people try for the light when you use color. They okay, I will change it for them. Let's be careful. Let's do this. Let's do this. Yeah. One lady. Like this area. So this one is a demand. This supply. Sorry, this one is a demand. So this is a swap zone. This one. So we expect this area. The price reach this area. Yeah, okay. So last one. NZDUSD. GBPCAD. So this one, yeah, this one. GBPCAD. Okay, sorry. Yes. And then card, so GBPCAD, we are expecting to see price will drop. This one I was analyzing since last week. Yeah, since last week I was analyzing it. With my plans, we check it, and price still expecting where we expect the price will drop, and then this one is will be massive. This is a liquidity void, so expecting massive which gold price so that's all. Okay, and then this also Ricardi. Okay, this one is this one. It still was supply and demand. The price will right up when we see this. It's a media trend, and this one media bullish trend is very easy to spot. It's very easy. I can say it's very easy. And for all, it's yeah, actually, if you focus on it, will be the but if you didn't focus on it, will be hard. Focus first. This one is a major trend. This yes, a major downtrend. And this one is a major uptrend. It's very easy. It's very easy. This a major uptrend. Yes. And we have this one is a structure break already. This one is a structure break. So how we how we analyze or how we support is very easy. This one is a structure breaker, so that's why I see a structure breaker. And I have demand zone here. And so this one is a structure breaker. Whenever price will go, we'll trace up to this area because it's applied. So okay, thank you for listening. The next video I think will be based in yeah, we shall upload it on tomorrow, I think. The next video and other yeah, it's about USD. I call it, and they call me USD. But so this one price will be price will lie. That's all. It's easy. Easy analysis. So don't complicate it. It's easy. Okay, thank you. Oh, study.